right, welcome back, everybody. The government is about to release the trade deficit report for June. We've got Rick Santelli and Bob Iacchino, who's the chief market strategist at LotusBrokerage.com, standing by at the CME Group in Chicago. Our guest host in studio with us today is Rich Bernstein. We've been watching what's been happening to the futures this morning, and there is a significant amount of pressure. In fact, those Dow futures have been down in triple digits all morning long. Rick, before we get those numbers, why do you think there's been so much pressure this morning? Is this people rethinking what the Fed said yesterday?
Well, I think part of it is the notion that, let's face it, the Fed downgraded the economy, but it isn't that that's a revelation. But I think to the equity markets, in some ways it is, because there's no magic wand. I think another way to explain it, and I don't mean to sound cynical, but I think, maybe we need to pass out leeches and do medical experiments. I think the government, in many ways, and the Fed are tinkering with this giant machine, pulling pieces out. I think it's getting a bit absurd. And I'm glad that this latest plan's only worth $250 billion over the next year and a half. Minus $49.9 billion on trade deficit. So that means we're going the wrong way. The last look we had at $42 billion was the worst since about mid-08, I think September of 08. So this isn't a good move in the right direction. Of course, it's going to impact all the revisions to what was already a weak GDP for the second quarter. And if we look at the response in the market, yes, we have triple digits on the S&P, the Dow futures. We're down 16 plus on the S&P futures. We see that interest rates keep moving lower with a 273.10. 30-year bond traders are still licking their wounds, because they didn't get that final memo after the statement that buying long-dated maturities didn't include the 30-year. Although I have to tell you, there were some people in the pit that seem to have an idea, and we won't speak any more about that. Back to you.
All right, Rick, stay right there. We're going to talk more about this. I want to bring in Bob, get his reaction to yesterday's Fed meeting, too. I mean, is this a situation where you say, uh-oh, what's the Fed know about this? They're downgrading their view of the economy, using perhaps some issues and some stances that we didn't expect out of them in terms of keeping just as much money out there. What happened, Bob?
Well, Becky, that's without a doubt the way the market is taking it. And as a strategist, my job is not to anticipate whether the Fed is right or wrong or even what they're going to do, but it's going to react to the market's price action as news comes out. And what I've seen over this is that while dramatic, the dip overnight, we got a little bit of a recovery in the U.S. session after the initial announcement, and then Asia kind of dragged us down. And that's the market longs reacting to what they feel is more uncertainty. So I think even though the Fed was basically trying to say, we're going to leave things the same and kind of get out of the way, it provided some short-term uncertainty. Having said that, as a strategist, we're going to be a buyer of dips all the way down to 1092 in the S&P before we get really worried about this.
Rich, what do you think?
Well, I think, if you go back 6 months ago, 2 years ago, everybody said the U.S. economy is much too dynamic to turn into Japan, that we could never turn into Japan. And the reaction this morning to the Fed's response is that we are turning into Japan.
Yeah, I've seen a few notes that have been out, including one from PIMCO saying turning Japanese.
Right. And now, I personally don't believe that is going to happen. I think we are very different than Japan for reasons that people haven't discussed. I think we can work our way out of deflation much more easily than Japan could because we are an importing nation, not an exporting nation. But that being said, I think the Fed's move, at least for today, has backfired.
Rick, you point out that the 10-year's at 273.10. I mean, that's just a crazy yield. Where do you think yields go from here?
Well, our one guy said he's an analyst, and I respected what he said. He said it's not his job to say whether the Fed's right or wrong. But to answer your question, there's a whole bunch of consultants out there that are with the government or used to be with the government that consult big funds that buy big boatloads of debt. And indeed, they are making, issues regarding deflation. It's almost like a chain letter. So, there's this dynamic going on that the bloodletting is truly a science and that we have all of these issues and it becomes self-fulfilling. Now, I'd like to ask Rich something. Sure. He said a profound statement. He said, we aren't Japan. However, if you look at the ills of Japan and the way the government tried to always have their mission statements impressed on the business community, one could would argue once again, if you would have not tinkered with the system and let things fail, it might have turned out different because, in essence, the government is everywhere. Sheila Bair is having problems because, you know, the new FinReg didn't really address what happens when you throw out rating agencies. I mean, all of these issues are truly making the market nervous, not to mention our best analogies are Japan and the Depression, and what they say didn't work is just a hypothesis as well. The sample size is too small. Nobody knows the answer, but they're spending billions of dollars doing this experiment. It's truly scary.
Well, I would just want I'm not sure everything we're doing is an experiment. That may be a bit of an overstatement. I mean, in terms of fiscal policy, I mean, it's a very strong response, and that's what traditional economics would call for, is a very strong response to a very deep recession. I'm not sure that's an experiment, Rick. But on the monetary side, I think we are going where we haven't gone before, and I think we are being very reactive in our monetary policy, and I don't think we're kind of flailing a little bit here, and I don't think that's any way to instill confidence in the markets is by having a monetary policy that 8 weeks ago was talking about an exit strategy and today is talking about it's reducing its expectations for the economy. I think, you know, a little less transparency by the Fed might actually be beneficial here. So maybe you and I agree on that point, Rick. I'm surprised to say that.
You get there in different ways.
I think we do.
We get there in different ways.
It's kind of like Godfather 2, though. Once the government and the Fed are in, it's impossible to get them out. They're never going to relinquish until they see victory. But maybe they're the thing standing in the way of victory.
I'm not so sure that you can't get the government out. I mean, keep in mind that we are at the wrong point of the cycle to be talking about how big a percent of GDP is run by the government. If the economy starts recovering and recovering strong, and we find that GDP as a government as a percent of GDP doesn't start contracting, then we have a big problem. But where we are in the cycle, I just think it's very premature to get all worked up about the government as a percent of GDP.
Hey, Bob.
Get all worked up, though, didn't you? I mean, there's a couple of great pieces in the Journal today about how the signals get distorted, how savers, how people doing the right thing continue to get crushed, how entities that should be interacting with business or interacting with government, the incestuous nature of the Treasury printing and the Fed buying. Come on, this is really getting crazy.
You know, Bob, to Rick's point, we did talk to Jason Trennert earlier this morning, and he's been warning his clients, don't get short in front of this, because he expects the government to make a big move, to step in to help out people who've been in trouble with their mortgages once again, sometime in the not too distant future.
So the big players game the system again. All the people that have the wonderful likes of ex-Fed chairmen walking in and consulting, they end up benefiting for all the things being done a lot more than the average guy or the small business who has so many regulations. It's unbelievable. It truly is.
Bob, if we saw some sort of move like that in the next few weeks, some sort of move to forgive more homeowners who have gotten in trouble, it may be something that was issued to Fannie and Freddie. Again, these are rumors that the government shot down earlier this week, but there are still market players who are advising their clients to be on the lookout for something like this. What would the market reaction be?
Well, look, from a trading and a shorter-term investing perspective, the main point I'd like to get out is that what you're seeing is a short-term floor being developed in this market. Today's move notwithstanding. At some point, I believe this down move is going to stop because the money is still free and loose. I'm not disagreeing with the philosophy of what Rick says or even necessarily the politics of what Rick says, but I don't believe we're Japan. I don't believe we're a wash, rinse, and repeat nation.
No, I agree with you there,
and I agree with you, Rick. There is a ballot coming up.
There is a ballot coming up.
But having said all of that,
let's get 50 pages of rags and be specific. Go with the intent of what we're trying to accomplish instead of loophole central.
Agreed, but I think the base is being built. I really do, from a standpoint of earnings. The thing that's missing is job creation, and that's what upsets Rick. Because you can't get that natural bias to the equities, that natural upward, I'm depositing money every month in my 401k to long-only mutual funds, upward bias that's been in the market for quite a long time and won't come back without jobs. But I believe the base is being built through easy money and through corporate earnings, which comes from that easy money. So I think we're going to be okay, but there are a ton of headwinds. Short term, I want to buy this.
All right, Bob.
You know, if we'd have let things flush a couple of years ago, once you flush, it goes down and then the water comes back up,
I don't think Rick should bring up Godfather 2 with two Italians from Chicago on the show. I just don't think that's a good idea.
All right, Rick, Bob, guys, thank you very much. Rich is going to be sticking around for the rest of the hour.